moving on with the show and what you need to know about mortgages today. The Federal Reserve Board member Lisa Cook, she said, quote, "I learned from the media that FHFA Director William Pulte posted on social media that he was making a criminal referral based on a mortgage application from 4 years ago, before I joined the Federal Reserve, as if there's no implications then." She goes on to say that I have no intentions of being bullied to step down from my position because of some question raised in a tweet. I do not intend to take any questions about my financial history seriously as a member of the Federal Reserve Board. And so I am gathering the accurate information to answer any legal and legitimate questions and provide facts. Now, I don't know about you, but that sounded like a confession to mortgage fraud to me. She also said that she's not taking it seriously. Seriously? So there's a moral to the story. If one of your files comes under scrutiny, or if you're accused of redlining or any otherwise serious infraction, all you have to say is, I'm not taking it seriously. And according to Fed board member Lisa Cook and her logic, it should all just poof, go away. Now, speaking of the Fed, and I talk in generalities about the Fed lowering interest rates, I want to make this one point clear. I know the Fed fund rate does not affect mortgage interest rates directly. Now, stick with me here. When I talk about the Fed lowering rates, I'm talking about quantitative easing and the Fed going back into the mortgage-backed security buying gambit and raising their balance sheet as they've done in the past. That's what I'm looking at. However, and it's worth pointing out, even if they just lower the Fed fund rate, that should help you guys out, and that should give you some ease, as those maxed out credit cards that your clients have should see lower payments, and those lower payments on revolving debt has a similar effect to both lowering interest rate, as both will lower payments and both should overall lower your debt to income ratios, either with the balance sheet, which lowers interest rates, or the Fed fund rate, which is going to lower your back end ratio with your revolving debt. Moving on, two of the largest states by size and economy, which means they do affect you in every other state, that being Florida and California, are going in opposite directions with their insurance debacles. California is getting worse, and Florida is getting better. It should be the other way around, since Florida has north of 300 mass high-rise luxury apartments that are about to fall over like the Surfside complex. And no, that is not the Mira Federal building that you're looking at. That's the condo complex Seaside down in Florida that collapsed a couple of years ago. Anyways, here we are. So what do you need to know? First, Florida State Chartered Insurer is covering less than half of what it did in September of 2023, falling from $620 billion worth of properties all the way down to $295 billion. Now, the coverage under the California's FAIR plan, which is decidedly not fair meanwhile, has risen by 42% in under a year to $650 billion. It's a 289% growth since September 2021. And second, this is even upended the normal order of operations for residential real estate transactions. Some home sales have even been canceled due to the difficulty of finding insurance, some 13 full percent. And that's in 2024, and this is according to the California Association of Realtors. It's nearly double what the buyer's agents experienced in 2023. Some residents have even said that getting insurance is more complicated than getting a freaking mortgage. That's not good. So why is this happening? Well, unlike California, Florida's declining use of its state plan largely stems from reforms to its plan that it enacted in 2022, including decreased litigation against property insurers. So it comes down to policy and not letting greedy ambulance chasers dig their claws as deep as they can into the insurance game. Where Florida said, enough is enough, quit suing, California said, well, go ahead and sue away. So when you're in Nebraska or Michigan, Kentucky, anywhere in any other state, insurance becomes a pain in the butt, do me a favor, drop an email to the next presidential candidate, and he will be, that's Governor Gavin Newsom from California, and tell him thank you for making it more difficult and more expensive for you and your clients to conduct your business of realizing the American dream of owning a home. I hope this helps. Hey guys, Brian Stevens here with Mortgage Shots. Listen, if you'd like to get together with loan officers from around the country and crowdsource the greatest marketing ideas, we do it on Tuesdays and Thursdays at 11 o'clock Pacific Standard Time. It's free, it's networking, and you get to know a bunch of folks, and your business will thank you for it. Fill out the information down below. Come join a whole group of people and see what we're doing. Again, no cost. The only price of admission is your participation.